For the longest time in the business of money lending, debt has always been an issue, especially non-performing loans, what we know as LPL. And so because of the high default rates, the Central Bank of Nigeria decided to introduce what is called the GSI Policy to help mitigate non-performing loans in the money lending industry. So if you do not know anything about the GSI policy and you're into the business of money lending, you might want to take a pause, listen to this video, like, share, and of course, drop a comment in the comment section where you're not clear about one or two things. Hi, my name is Precious Toju, aka the Structure Lady, aka Queen of Debt Recovery. I'm a business and debt recovery lawyer, credit analyst, and insolvency practitioner. I help money lenders, finance providers, and businesses recover debts faster, save them resources, and build a profitable business. Please, if you're new to my YouTube channel, click the subscribe button and the notification button by your right hand side. GSI policy simply means Global Standing Instruction. It's a situation where a borrower has not paid its loan or debt for the longest period of time, and then you as a money lender or a finance provider can get that money out of the borrower's accounts with any bank whatsoever in Nigeria and of course outside Nigeria. What that simply means is if Mr. John comes to you as a money lender to take a loan of 20,000 naira, and then the due date has elapsed, Mr. John has not paid, it's been one story or the other, or Mr. John just decided to ghost you. You know how this thing works in the money lending industry. GSI policy simply says, don't disturb your pretty head. Just activate the GSI mandate, and wherever you find his money, deduct up to the amount that the borrower is owing you. However, as beautiful and good as GSI policy is, there are certain money lenders that cannot leverage or take advantage of it. Number one set of people that cannot are state regulated money lenders. So if you're a private money lender or you're a traditional money lender and you have just a state lending license, you cannot leverage on the GSI policy because the GSI policy is solely for finance providers, banks, and money lenders that are regulated by the CBN and have CBN lending license. But does that mean that as a private money lender, a traditional money lender, or a state regulated money lender, you cannot leverage on the GSI policy? Yes, you can. Two ways. Simply upgrade. Move from being a state regulated money lender to a CBN licensed money lender. If that is too much of a big deal for you, or you do not readily have the finance available, then you can just partner with a CBN regulated financial institution to tap into that GSI network. What that simply means is you will still run your money lending business. Of course, you're a state licensed money lender, but if you want to tap into that atmosphere using another CBN regulated finance company, all you need to do is ensure that you take up your onboarding application processes and leave disbursement and recovery to the finance company or the bank you want to partner with. But do not forget, all of this comes with quite a number of legal framework and paperwork, and of course you can't do that on your own. You need to get an expert. What accounts can you activate your GSI mandate on? You can withdraw from an individual savings account. You can withdraw from an individual current account. You can withdraw from an individual joint account. Yes, you see those people that like to do joint account with their husband or with their wife, or those that would use their parents' name as a leverage to transfer a huge sum of money to an account because they don't want to be seen as the owner of the money. GSI policy simply says if the BVN or NIN is linked to that account, come on, withdraw that money as quick as possible because they are owing you. You can also activate your GSI mandate on investment of fixed deposit accounts. You see those ones that will go and put their money somewhere, they want it to be bringing them interest, but they are owing you as a money lender somewhere. GSI policy says even in the fixed deposit account or in the investment account, you can deduct what they are owing you. And the most interesting part is you can activate GSI mandates on domiciliary accounts. So all those dollar accounts, euro, pound sterling, cedis, yen, and the rest. Yes, I mean, come on, that's why it's called global standing instructions. So global simply means it doesn't just apply here in Nigeria, it also applies to accounts outside Nigeria. Now, before you can deduct from a debtor's account using the GSI policy, two important things must be in place. Number one, the borrower at the point of collecting money must have signed you what is called the GSI mandate. Now, the GSI mandate comes in two ways. You can include it as a clause in your loan agreement. This is one thing I tell my community members. There is no way you can give out money, even if it's 10 naira, without having terms and conditions attached to it. So in that terms and condition, which doesn't have to be 100 pages, come on, we don't do those agreements any longer. You have to ensure that there is a clause that states that the borrower has given you the right to go ahead and deduct from any of his accounts where his BVN or NIN is linked to, as long as the person is owing you and has refused to liquidate or pay his debts with you. You can do that by including the clause. You can also do that by letting the borrower sign a GSI mandate separately. If you ask me, in my capacity as a debt recovery lawyer, I highly recommend that not only should you have the GSI clause in your loan agreement, you should also annex the GSI mandate. So what I mean by annex is simply you have a loan agreement that says, if I, Mr. John, default within 60 days, within 90 days, I've not paid this debt, within 30 days, I've not liquidated this loan, you have the right to deduct it from my other account. Annex the GSI mandate to be an attachment in line with that clause. Talking from experience, you might like to tie up all loose ends. Now, the most interesting part about GSI policy is debt recovery. There was a day we were having a conversation, and one of the staff at the office said, if GSI policy says you can deduct from any account, so why debt recovery? Why bother? Why should banks and the rest even bother about debt recovery? Now, that is where a lot of money lenders miss it. Some people actually think because there are softwares that help with debt recovery, so there is no need for planning or giving structure to debt recovery. Nah. The place of machine or software cannot replace the human touch. Softwares are more like garbage in, garbage out. What exactly do I mean by that? For debt recovery softwares, they automate deductions, every other thing possible. But have you thought of a situation where your automated deduction doesn't go through because your borrower just decides to go and deactivate that ATM account because he or she knows there is no money in it, or she wants to use the money in it? How about a situation where the debtor is saying, I'm not denying the fact that I am owing you, but I do not have the capacity to meet up with the payment schedule. Can we have a restructuring? How about a situation where you want to do debt factoring or debt consolidation? So there is a limit to software. And this is one of the reasons I keep telling money lenders, investors, and stakeholders in the money lending industry that they must structure, budget, and plan for debt recovery. GSI policy is simply to help you mitigate. It doesn't take the place of structuring and budgeting for debt recovery, because GSI policy is on a first come, first serve basis. What exactly do I mean by this? Imagine that Mr. John took a loan from ABC Microfinance, for example, in January, and by May his loan is due for payment or overdue for payment, and he has not finished paying. Then in the month of May, Mr. John comes to you to take another loan. By the month of August, September, it would have been overdue. In that situation, what ABC Microfinance Bank would simply do if they have a GSI mandate is to activate it. So even before the month of May comes in, they may have activated and gotten the money out, or even before your loan is due. Whereas your own loan will be due around August, September. So that is why you need to understand that you must still plan for debt recovery, because whoever is the first person to activate the GSI mandate is the person that will get the money at the end of the day. And one of the ethical practice in the GSI policy is that you cannot activate your GSI mandate till that debt or loan is long overdue. So the GSI policy is more like a last resort outside the courtroom, where you've tried everything, the due date has elapsed, you've tried internal debt recovery, you've tried every other thing and every other way to ensure that the borrower pays his debt, but the loan still remains an NPL, non-performing loan. So you now resort to doing what? To activating the GSI mandate. The long and short of it is, whether or not you have the GSI mandate from any of your borrower or customer, you must plan, structure, and budget for debt recovery. Do you have any question concerning the GSI policy by the CBN? Let me know in the comment section. See you in my next video.